Hey guys, welcome back to the Smash Property Podcast. Today we're unpacking a market that has been under the radar for quite some years, and as of right now in 2025, it's starting to turn a few heads and showing some signs of life. But is it the right market for you, or is this just another investor trap? Let's break it down. All right, so let's dive straight into this and let's get a bit of a snapshot as to where Darwin is at right now. So the median house price in Darwin is floating around the 550 to 650 mark, and when you compare that to other capital city markets, it is ridiculously cheap. There are a lot of things that we need to go through because it's not just about the price and the yields. There are other factors we need to look into, and we're going to get into all of that. But median house price, comparable to other capital cities, very, very low. We've got rents that are very, very strong. So those sort of median rents are sort of sitting around the $600 to $700 a week mark for a standard house. Vacancy rates, below 1%. And according to the HTW property clock, it is officially in that rising market phase. Now, you've got to take that with a grain of salt. But this is, I always say, you want to buy in a market which is rising and you want to kind of ride that wave as it goes ahead. But the biggest thing is that the current values are still below the peak from 2014. So when you think about it, from 2014 to now, it's basically had no growth. So that's a red flag for me. Not something that we want to be, something we've got to pay attention to. I'm going to deep dive into that in just a sec. So you've got the affordability, you've got great yields, and you've got timing looking like it's working in your favor. To have those three combinations in a capital city is very, very rare. But why are investors paying attention to Darwin right now? Traditionally, it's not a city that people often look at first when it relates to property investing. There are a lot of investors starting to flow in, and here's why. Like I mentioned, we've got insane yields. We're talking 6-7% gross yields in the right suburbs, and that's a lot better than you're getting in Brisbane, Perth, or even Adelaide at this point. You've got an entry point where you can buy a house for $500,000 and sometimes less in the right areas. Listings are tightening up, so they're sitting at around 35%. You've got investor loan activity that increased 100% in the last year. So you've got a lot of investors already starting to pay attention to Darwin, and a lot of investors are buying, as well as there are a ton of big projects that are kicking off that is going to drive employment and demand, and we're going to look at what those things are in just a second. So what does this all mean, really? In my opinion, you get the cash flow now. If you pick in the right area, you get some growth upside over the next few years. But there is a catch. Let's be real. Darwin is not traditionally the perfect market. Long-term capital growth is weak. So I went back and looked at 30 years of property price data from Darwin, from CoreLogic, and the average annual capital growth was only 2.4%. That's less than inflation, right? So over the long term, historically speaking, Darwin has not been a capital growth market. The other, risk we have, it is a very small market. And when we have very small markets, they tend to move in sharper cycles, right? And these small markets are impacted by seemingly small things that the Brisbanes and Sydneys and Melbournes wouldn't otherwise be impacted by. When I look at population growth, it's been hasn't really been there, to be honest. There's been negative net interstate migration up until very recently, with the Northern Territory as a whole starting to change though. So that's something that we need to consider. The other risk is insurance, right? Depending on obviously where you're going to buy in Darwin. There is cyclone risk up there, right? There are weather events that do impact the area, and insurance premiums are going to be, in some areas, a lot higher. Now, that doesn't mean to say it's a deal breaker, something that you got to watch, because sometimes your general insurers won't give you a reasonable premium. For example, they might charge you $5,000-$6,000 plus a year, so you might have to go with a specialized insurer. There is ways around that, of course. So this isn't a market where you might be looking for a quick flip, make 20% in 12 months. This is more of a high yield play, value add, and set and hold play, right? That's my opinion, and I am only just a dude on the internet talking into a microphone. So validate before you buy, people. So who's Darwin for? Now, if any of this sounds like you, Darwin might be worth looking at. If you're chasing a strong yield with affordable entry-level prices in and around the $500,000 mark and you want to get into a capital city, that might be something that you'd want to pay attention to Darwin for. It might be for you if you are looking for the light cosmetic reno uplifts, like paint, carpet, that sort of thing, because you've got a lot of older houses that haven't been touched, and there is a lot of opportunity, in my opinion, for investors that love to buy property, manufacture some growth, and then potentially exit the market quite quickly. So that might be for you if that is your cup of tea. If you've got that sort of 450 to 800K budget and you want to get a bang for buck and you're cool playing the longer game with strong cash flow now and growth later down the track, remembering in the last 10 years, it hasn't really grown much at all, Darwin might be something that you'd want to consider at. So, all right, cool. If that's something that is piquing your interest, here are some suburbs that you can look at and where I would be sniffing around if I was looking at Darwin right now. All right, so under the $500,000 mark, I always get these names wrong, but they're in the Palmerston region. So Malden, Grey, and Woodroffe. I think that's how you pronounce it. We've got big blocks, older homes, 6+% yields, and plenty of upside, as I just mentioned, through little minor renos that you can do, right? So I love this strategy because you buy a property, you can manufacture your own growth, so you're not reliant on the Darwin market itself lifting itself up. You are in control of that as the investor. Two things happen. You can increase the value of the property relative to the area, number one. Number two, you can potentially increase the rent. Although the yields are very, very high, you might, because your property is now looking a little bit more at the premium end of town, you might be able to attract a higher paying tenant and therefore increase your yield. If you've got around the 800K or less, here are some suburbs that you can look at. Durack, definite lifestyle suburbs. That's dipped slightly in recent times, but in my opinion is primed for growth and is primed to rebound very, very soon. This other one, I don't know how to pronounce it, Bellamac. We've got a bit of newer builds there and some strong growth signs in that area. Nakara. All right. Apologies if I'm butchering these names, but it's a little bit closer to town. It's near that sort of uni hospital precinct and is great for that reno value add strategy that I just spoke about. And you've got Howard Springs. So this is more of a rural lifestyle play, strong buyer demand there. And you've got large, massive blocks of land there as well. So those are some areas where you can look at in and around the sort of 800K mark or less. Now, I like to, data is one thing, right? And this is where I always say, like, historical data is no guarantee of what's going to happen. It's a good indicator. So I like to look at things like job growth, population growth, right? What drives population growth? It's largely jobs and job growth in the area. So here is what I have looked up that is going on in the background that is likely going to fuel housing demand over the next sort of 3 to 5 years with some of the projects that are happening in Darwin. So we've got a $515 Darwin Shiplift project. So that is going to create a significant number of jobs in the marine and defense sector. We've got the $240 million Charles Darwin University campus, which is going to boost education, obviously, student demand. With that, there is a potential need for an increase in housing as well. We've got the $6 billion Barossa gas project. So it's an offshore gas infrastructure project. It's a bit of a long-term play. So not sure it will create a huge amount of jobs in the short term, but potentially over the longer term, it may do just that. We've got $1.5 billion Middle Arm Sustainable Development Precinct. So this is shifting towards more of that sort of clean energy export. Again, just sort of putting Darwin in a different light than what it traditionally has been known for. We've got defense precinct upgrades. That is definitely going to increase jobs and maybe stabilize the population a little bit more. As I mentioned, Darwin has had the population base decrease. I'm looking for the word. Net interstate migration deficit, I think might be the official term for it. Again, the $2.1 billion defense infrastructure pipeline, so naval upgrades, army base works that's happening there, again, just to stabilize the population a little bit further. The government's goal, as in the Northern Territory's government's goal, is to hit 300,000 people population by 2030, and they're pushing pretty hard on that growth. Currently, from the numbers I was looking at, it's sitting around the 250,000. It's really hard to get accurate numbers, but increasing population by 50,000 over the next sort of 4 or 5 years is going to, in some degrees, impact the housing market, at least in a very minor way. In and around that, the traditional infrastructure that you would expect, upgrades to regional roads, changing zonings, that sort of thing, to unlock future housing corridors, is something to be paying attention to when you are looking to buy. You don't really want to be buying in an area where they might unlock a whole bunch of new land, and therefore they create a whole bunch of new supply, and the property that you might buy now might sort of stagnate in price. So be careful about the surrounds, and this is why doing your DD is really important, so you know what's going on around the area and the property that you're buying. So population growth has been slow. It is shifting, starting to change, and the investment into the Darwin economy is real. As I just said, there's a couple of $1 billion, several $1 billion of projects going on in and around the area. And yeah, I know, billions of dollars just gets thrown around, willy-nilly these days. It really doesn't have a lot of meaning, but for a place like Darwin, it means a lot. All right. So, is Darwin the golden ticket? In my opinion, it's not for everyone. If you want those fast flips, high-end sort of style properties, this is not for you, right? There's so many other better markets for you, right? But if you're looking for cash flow, bit of value upside where you can manufacture your own growth, and you're happy to let the market potentially do its thing or take it on yourself and manufacture the growth, like I mentioned, Darwin's got a lot going for it right now. Play it smart though. Buy well. You've got to buy the property at a really good price. Don't get sucked in and get FOMO and rush into Darwin because it feels like it's the next best thing. Make sure the fundamentals work. Make sure the numbers stack up. Renovate well, right? Don't pour, a couple of $100,000 into a property and then wonder why you don't have the return on investment. You need to do a feasibility study before you do any renos to know, okay, if I spend $1, am I going to get $2, $3, $4 back? You need to know that before you do anything. So that is the deep dive into Darwin. I hope that is helpful in some way. If it is, and you got some value, appreciate it if you could like the video and potentially subscribe, because we do this all the time. Every single week, lots of little value drops in the podcasts and videos that we have out there in the internet. So like I said, I hope you got some value out of that. Until next time, thank you so much for watching. I'm Nick V. We'll catch you soon.